Sonlin and Herwig Konings are founding partners of Security Token Group. All opinions expressed by them or guests on this podcast are solely their opinions and do not represent the views of Security Token Group or its subsidiaries. You should not take any opinion expressed on the show as a specific inducement to make a particular investment or follow any investment strategy. This podcast is for informational purposes only.
Hello everyone and welcome back to this week's episode of the Security Token Show. We're talking about episode 106. We're reporting to you from sunny Miami, Florida. I'm your host, Kyle Sonlin, joined by my co-host and business partner, Herwig Konings.
Pleasure to be here.
And we've got a great episode to break down for you today. But first, before we get into that, I do want to mention that this episode is sponsored by TurnCoin. Now, TurnCoin is launching their own NFT platform, allowing any athlete, artist, celebrity, or talented individual to launch virtual stacks, which are essentially trading cards that anyone can buy and sell to invest in their favorite people. And so they're launching this platform, and not only are they doing that, but they're issuing a security token behind it. The platform, called The Exchange, is selling out revenue of the company in total revenue that anyone can invest in to buy into part of the platform. These shares of revenue are called TurnCoin, based in a security token that they're currently fundraising for now. So you can go to turncoin.com to learn more about the platform and the investment opportunity and do your own research. So thank you for TurnCoin for sponsoring this week's episode.
Thank you, as always, to our sponsors for making this show possible. But today, welcome. We've got an action-packed episode for you. Today, we might be talking about an interesting topic, accredited investor definition changes. They can have huge ramifications. It'll be juicy. And of course, we've got our industry news, our secondary market updates, and our new security token offerings. But first, we always start off with our companies of the week, where Kyle and I, we each chose a company that we thought made the biggest moves in the space last week. Kyle, who do you have for episode 106?
So my company of the week this week is IXSwap. Now, IXSwap is actually building a decentralized exchange specifically for security tokens and tokenized stocks. The company raised $1.75 million from Cosima Ventures and other venture capital firms to build a decentralized platform to trade securities with a focus on compliance and on regulatory controls. Now, this is interesting because we've talked about decentralized exchanges before and how, certainly with the SEC, they're not quite sure about how that's going to work. IXSwap is the newest one to enter into this space, launching a platform via smart contracts and automated market makers specifically for security tokens, and that's why they won my company of the week.
I think that's fantastic. We've both seen a lot of potential in DeFi, I think, right? And the reality is you can do regulated DeFi. It's possible. There's innovation that can be applied to existing financial infrastructure, and it sounds like IXSwap is taking a hack at it and making it possible, so congratulations to them.
Keep your eye on that one. For you, Herwig, what you got?
Well, I've got Japanese investment bank Nomura. You may have heard of them or read about them when we've talked about them in the past in the red-hot Japanese security token scene, but I chose them specifically for a rather interesting innovation using their iBet tokens platform. In this case, we're talking about pasta and pizza tokens. So they've teamed up with a luxury Italian food delivery service and an award-winning chef, and they're actually going to be selling tokens representing units that you can buy or trade or redeem in the form of, looks like we got pumpkin ravioli, asparagus pizza, and chicken tenderloin here. So that's a delicious set of investment opportunities that you can actually make money with digitally without ever consuming, as these are homegrown, have award-winning products. And it's just another use case of an incredible tokenization application. And that iBet platform has already been doing security tokens, as we know. In fact, this looks like one and the same, as they will not be tradable for at least a year. And in this case, we've already seen the iBet platform do corporate bonds, real estate. So this is just the beginning of a whole lot of tokenization in Japan by Nomura. So congratulations to the company. That's why they won my company of the week, Kyle.
It's not their first company of the week award, and yet again we're seeing Japan as a hotbed for security token innovation. It's a global industry, as we always say. It's just fantastic to see everyone around the world building towards the future of finance.
It sure is. It's inevitable. And with that, let's get into the top 5.
Let's do it.
And kicking off our top 5 for the last week of August in episode 106 here, we're starting off with the SEC, who is clearly making a move towards regulating DeFi with their latest contract with Anchain, Anchain.ai, which is a firm specially focused on actually exploring and focusing and researching on blockchain transactions on DeFi platforms that could be used in illicit activities such as money laundering and other suspicious behavior. So this is the SEC saying, you know what, DeFi, we think it potentially is under our purview and it has anything to do with securities. They're going to start to regulate it, and now they're backing it up with hard data that they can find on the blockchain with this research firm. So I think that's actually a pretty big deal. I mean, DeFi has an $82 billion space now when it comes to assets in the space. Uniswap traded almost $2 billion in 24 hours. This is a crazy space, a lot of money flying around, and a lot of it could be intersecting with the SEC's purview. So here we go. Let's see what happens. You heard it here first, folks. DeFi is getting attacked now by the SEC.
Yeah, I mean, I like this move though because the SEC isn't putting it on themselves internally to have to figure out a lot of these deep and complex nuances of what DeFi and blockchain and smart contracts are doing. They're actually bringing an outside firm that has experience and has built an AI engine that will actually be able to analyze wallets that are trading. They'll be able to get some reporting done and be able to have more of the details to be able to make proper rulings and justifications around their actions, as opposed to taking it on themselves, which is certainly a lot to handle if you're not in this space full time. So props to the SEC for at least working with other firms to really get a good grasp about what's being built in this space instead of just kind of knee-jerk reacting and doing something drastic.
That's right. In fact, as Jonas Schulman likes to say, comply or die. So that's the SEC. They're always being smart. Got to watch out. Moving on to number 2, we've got Japan. We got the Liquid Exchange, one of the most popular cryptocurrencies exchange in the region, getting breached with a hack. We're looking at $97 million breach. That's no small chunk of change. $45 million of it in Ethereum, and the other remaining amount in Bitcoin, XRP, some Tether, and a bunch of other coins. We saw that at least 16 million of it was frozen. However, that was on Ethereum. Is that recoverable? Who knows? They certainly at least have a lot of safeguards hopefully in place for the investors and customers that got hit by the breach.
Not to mention that the hackers took the Ethereum that they had and swapped it through decentralized exchanges to get it out in a permissionless fashion. So again, this is one of those places where you start to say, all right, should there be some controls on DeFi?
Hope maybe the SEC will find out about those transactions with their new firm partner. And number 3, Blockstream, they raised $210 million, Kyle. Wow.
$3.2 billion valuation for Blockstream. Dr. Adam Beck, as well as Samson Mao and many others, have been pioneering in the Bitcoin space for a long time now. Blockstream is one of the largest miners in the space, but they also have been pioneering the Liquid Network, which is a side chain of Bitcoin that was created to allow for a lot of blockchain-style transactions. But specifically here, what I found was fascinating was that the lead on this investment was Bailey Gifford, which is a $486 billion assets under management investment firm. Alan Farrington of Bailey Gifford is going to be joining the board as an observer, and he said specifically that they are convinced by the opportunity of tokenized securities on the Liquid Network. So this was definitely an investment into security tokens, because Blockstream is not only doing the Blockstream mining note, which is a security token that we've covered here on the show, they're also leading through Exordium, which is doing a security token offering. And so they're doing multiple security tokens, and Bailey Gifford specifically sees tokenized securities as the opportunity to transform capital markets. And so it's fascinating to see that that's where a lot of this investment went, not just into crypto.
That is a testament, Kyle. Wow, it's absolutely incredible. The money just keeps flowing into the space.
Absolutely.
Now, number 4, going back to our case of the year, XRP and the SEC, we've got yet another development. It's almost like we need a segment on this at this point. There's so much information, Kyle. But specifically, let's look at it this way. There's a third party, John Deaton, who's been representing thousands of XRP investors, trying to say that the SEC's lawsuit against XRP is untimely and unfair, and as a result caused billions of dollars in losses that should be recovered to the investor. So that makes this case just a little bit more interesting, on top of the fact that any precedent set from this case could have actual applications and ramifications across the entire crypto industry. And in this case, John Deaton, the lawyer representing everybody, actually found some information from a consensus event back in 2019, I think it was, where actually they had the SEC commissioner, one of the SEC commissioners, as well as the general counsel from Coinbase on the same panel talking about XRP and talking about the very fact that the general counsel of Coinbase saying they have a very robust framework. They've worked with a lot of external counsel to make sure that they have a securities framework check in place to make sure that they don't list anything that could be considered a security on Coinbase and therefore not violating any securities law. In this case, there was some banter back and forth that might have revealed that the SEC has already been trying to talk to Coinbase about this, maybe potentially not following the Fair Notice Act. Regardless, it's potentially another interesting reveal within this case that once again kind of puts it in favor potentially of XRP, of Ripple getting away with this.
Yeah, and then also the fact that the SEC specifically prohibits any employees of the SEC in owning securities. And up until 2018, they had not classified any of these things as securities. And so XRP is using that as another piece of ammunition and saying, look, you're allowing your people to buy these shares. You clearly didn't see these as securities. We've been around for 5-6 years and you hadn't done anything. And then that's when those changes started to happen. So there's some very interesting things coming in here. And as we keep saying, there are cracks in the SEC's case here. It's not as straightforward as maybe they had hoped.
And we've seen precedent in their last angle with previous director SEC Hyman, who actually said that you could evolve a security into a utility or a non-security like function, and this might have been the case with XRP. So we'll definitely keep you on touch with all that, but we've got one last thing you need to know about. Number 5, Vertalo hosting a conference. Kyle, what do you got?
Potentially this is going to be the conference of the year, especially with the fact that everything's been so shut down. And Vertalo is launching the Digital Assets and Securities Conference in Austin, Texas at the end of September. And they've got a really great cohort of companies that are going to be there. It's sponsored and led by Planet Wealth, formerly PrefLogic, who's launching a bunch of different solutions in the digital securities and capital market space, specifically for capital formation and fundraising. They also have 4 ATSs that are going to be there: T0, Texture Capital, Oasis Pro Markets, and Templum. All of those guys are going to be on a panel talking about marketplaces and how we can evolve these things. That's going to be a fascinating conversation to have. They also have other high-quality conversations around capital market formations and tokenization of these different assets. So it's just going to be a really great event on top of not only the actual quality of the speakers and the conference attendees that will be there, but it's also at a country club. They're hosting dinners and events. It's going to be a really great networking opportunity on top of just thought leadership sharing, and they've put a lot of effort into this. We're going to be there. The Security Token Market team's going to be there. We're going to be making all kinds of content. We're really happy to be a part of it, and it's definitely one that you don't want to miss if you're going to be in the Austin area in the end of September, September 21st to 23rd. Definitely try to stop by.
Sounds like it's going to be a great time. And with that, let's get into the rest of the industry news.
I'm Jessica Burns, and I'm back with this week's industry updates. CFTC Commissioner Don D. Stump has outlined the CFTC's regulatory and enforcement authority with respect to digital assets, expressing the need for broader understanding of the scope of the CFTC's authority over digital assets prior to determining the need to redesign cryptocurrency regulatory oversight. The CFTC's regulatory authority is inclusive of the commodity futures contracts and derivative products, not cash commodities. Therefore, while the CFTC regulates digital assets derivatives such as Bitcoin future contracts, it does not regulate digital assets or securities, even if the digital asset is a security. It does, however, regulate the derivatives on securities, therefore requiring other CFTC has regulatory authority over such derivative products on digital assets. Because the CFTC's enforcement authority undoubtedly covers the products it regulates, an unregistered trading platform offering digital asset derivative to U.S. persons or violating other CFTC's trading regulations is subject for enforcement actions. Investment management company Investcorp and Singapore's private capital exchange ADDX has teamed up to expand the use of digital securities in private markets. The first product has been introduced under the partnership is a diversified portfolio of U.S. residential properties from Sunbelt Multifamily Portfolio that was offered by Investcorp in 2012. The partnership between Investcorp and ADDX will aim to explore potential joint initiatives in areas including private equity, real estate, credit management, absolute return investments, strategic capital, and infrastructure. Investcorp is repeatedly expanding its presence in Asian markets, having invested around $500 million in the region's ecosystem during the last 18 months. The firm has invested in key areas like technology development, healthcare, and services related to customer consumption. NETK is partnering with blockchain technology provider Polymath to bring blockchain-specific identity verification to Polymesh, a permissioned blockchain purpose-built by Polymath for security tokens. The collaboration will help protect against fraudulent account creations while ensuring the onboarding process to the chain is easy and efficient. Polymesh solves issues with public infrastructure through key design principles built onto the Core's chain, providing a chain built compatible with the company market need. And the much anticipated launch is scheduled for later this year. GK8 announced this week its proprietary end-to-end custody solution designed for banks and financial institutions is now available for institutional consumers that want to offer custody of Hedera's native HBAR and HTS-based tokens. With an ability to process 10,000 transactions per second, tolerant security, and its world-class governing council, the Hedera network is already one of the world's most used public distributed ledger networks. Crypto finance group Incore Bank and Inactica have selected Tezos to create on-chain digital products through the new token standard for asset tokenization. Incore Bank would enable additional digital services with XTZ, the native cryptocurrency of the blockchain network. Incore Bank would provide staking, trading, and institutional-grade storage for XTZ, making it the first local bank to launch such products. In an exciting joint venture between an LA-based company, CurrencyWorks, and Beverly Hills-based Derby Entertainment, it announced this week that their new Anthony Hopkins film will be released on an NFT platform instead of a streaming platform or released in theater. In September, the company will auction off one NFT linked to the film, which will grant the owner early access to the release along with a host of extra features like bonus footage. The company considers itself the first direct-to-consumer full-length feature film NFT viewing and distribution platform. It will release consecutive versions of the NFTs available as drops for which users must queue up. Each round will tender a higher number of NFTs, with each granting owners fewer associated perks. Owners will be able to display and trade their NFTs on the company's platform. In other news, the Security Tokens team has some news articles for you this week. Our very own Peter Gaffney dives into the details of tokenizing art funds in his weekly blog, Tokenize This. And our very talented Samuel Sachs weekly series, Tokenize Tuesday, talks about Ravencoin and how it is quickly becoming the Amazon of token issuance. You can find these articles and much more on our website. That's all I've got for you today. Now let's go over to John and get the latest STO and market updates.
What's up, Token World? I'm John Pittman, your Token Boy, and here goes your security token offering update. First up, we have Glozal, a company founded this year and based in our very own downtown Miami, 305. They specialize in music technology and are offering artists and fans the ability to buy, sell, trade, and discover exclusive digital music assets on their encrypted network. Glozal created an NFT music platform, which is the world's first NFT music player. They're here to not only change the way music is distributed, but it has also allowed music fans and creators alike to become stakeholders and owners of the company. Glozal's plan is to reshape the music fan experience by providing them with exclusive content directly from their favorite artists as an NFT. The Glozal security token, with the ticker name GLZ, will represent future equity in Glozal. The offering becomes live September 2nd, 2021. The GLZ tokens are fully digital securities, ERC-20 compatible, and are tradable on decentralized secondary markets. Our next STO comes from a German-based tech company called Intelligent Fluids, who designs and produces high-performance cleaning fluids. The company will be releasing a revenue participation token called SmartChem, or SMAC for short. Each token allows a holder to participate in up to 6.45% of Intelligent Fluids revenues. Keeping global industries clean in a sustainable, non-hazardous way is one of the largest unsolved problems in today's world. Historically, there have not been enough business incentives to properly address the issue. Intelligent Fluids looks to tackle each of these issues using patented technology that is both much more efficient than conventional solvents and 100% harmless to people and the environment. Well, folks, that's it for the weekly STO update. If you want to stay in the constant loop on security token news, then follow me on Twitter at TokenBoyAdvisor. But here goes Keith with your market update. And as always, see you on the other side of the blockchain.
Now, let's move right into our secondary market trading segment. As always, all news and pricing data is sourced from stomarket.com. At the time of recording, the total market cap of the security token space is around $997 million, We saw a tap off of the $1 billion mark earlier this week, but we since saw a little bit of a retracement. By the time you're seeing this, it'll likely be at $1 billion and holding that steadily. T0 is now at $5.30 this week, down about 18% from $6.60 the week prior. Overstock is also down a bit on the week, down 16% with the token dropping down to $62.50 from $77 with a weekly trading volume of 842,000. The INX token is now sitting at $2.60, up 188% from its opening price of 90 cents. This extends the INX token's incredible performance since its launch just a few weeks back. Last time we talked about the threat of the largest security token, Overstock's OSTKO, being overtaken by INX. This week that happened, with the INX token taking that number one spot with a weekly trading volume of 875,000 and a market cap of 351 million, which is 28% higher than that of the market cap of Overstock. Now, let's talk a little bit about tokenized stocks. We have the Chinese multinational automobile manufacturer, NIO. Shares, they were the second highest traded tokenized stock this week with weekly traded volume of 7.25 million, second only to the Grayscale Bitcoin Trust shares, which this week traded at a whopping 49 million in volume for the week. This absolutely dwarfs previous weekly trading of Grayscale Bitcoin Trust shares, which traded at about 3.5 million in volume just last week on FTX. FTX is once again the clear winner for tokenized stock trading yet again, surpassing volumes on Binance and Bittrex by a long shot. Considering that each exchange is offering similar, if not the same exact listings for tokenized stocks, the great disparity between volumes may simply indicate a clear choice of brand preference from retail traders. It's been another exciting week in the markets. As always, do your own research and hit me up on Twitter at KeithDLT. Send me all your hot takes. See you next week.
And diving into our main topic today, we're going to be covering accredited investor laws. This is all about access into private markets, and there are some rumors that these laws may change to make it more exclusive for any investor here inside the US, and that's going to have significant ramifications for investing in the private markets, and we just cannot wait to dive into this topic today.
In fact, without regulation crowdfunding or Reg A+, it was very, very difficult for the average retail, or as they say, non-accredited investor, was being able to access the private capital markets, right? Angel investment opportunities, real estate investment opportunities, many different, investments that weren't available on the public stock market, essentially. And as a result, they classified accredited investors, as the SEC deemed this way back when, basically said, okay, basically if you're rich enough, it's really the crudest way to put it, you can bear the risk and loss of actually participating in what they deemed risky investments into these private companies and investment opportunities. And as a result, back in 1982, they defined the definition of accredited investors as $200,000 a year in annual income for 2 years, or with your spouse, you can actually make up to $300,000 combined, at least for 2 years, and then you qualify as an accredited investor. Or you could have $1 million in net worth, in net assets, that's your liabilities minus, plus, against your assets. And then you also cannot include your primary residence as a part of that calculation, so that your value of your home that you're living in, you can't use in your $1 million net worth calculation. So that's a big deal. That's already roughly only about 10 to 12% of Americans that qualify being able to invest in these opportunities.
And many people feel like that was already pretty constrictive. I mean, you're talking about 10% of the population. Many other countries have more sophisticated investor laws around education and some of these other components that don't necessarily have to be in line with your net worth, whereas as we've seen here with the US, for the SEC, it's really all about just that net worth calculation. And so at least what we saw in the developments in the space were the crowdfunding opportunities. As Herwig said, Regulation CF allowing any company to raise now up to $5 million because they've expanded these regulations. They've also expanded the Reg A+, allowing to raise up to $75 million from the crowd, from your retail investors. And we started to feel like, okay, maybe this is going to open some potential doors to create more financial inclusion. And I was only taken a step further when the SEC announced that there were additional opportunities to become accredited, which is where you could be a Series 7, or some of the investment banking licenses would allow you to potentially be accredited even if you didn't have those net worth calculations that you potentially needed to have. So There were all these opportunities. We were starting to see some great momentum moving forward around whether you could be accredited investors or not, until recently when there was a bombshell that dropped that potentially we're going to constrict that significantly.
Well summarized. In fact, we know quite a bit about this space. In fact, I know quite a bit about this space thanks to my previous business partner, Adrian Alvarez. He was actually the one who wrote this bombshell article revealing this topic that today. And actually, it's part of the Token Rookie series that he's launched. You definitely should go check that out on YouTube. That's a very interesting conversation about all things tokens. But this article specifically was on the fact that in the past, we had started an accreditation software company. So we actually provide compliance to crowdfunding portals, investment programs, anyone trying to verify accredited investor status digitally. And as a result, we became very, very familiar with the space. And he specifically, being a JD MBA from the University of Miami, he actually knows the law and the regulation very, very intimately. And as a result, he was sort of aware, after talking to as well as potentially some people very insider on the topic, saying that the new democratic regime within the SEC may update the definition. And how would they update it? They would attach it to inflation. And with inflation, that hasn't been updated since 1982. So this is where the problem falls in, right, Kyle? We saw that actually if we were to adjust, we would actually see that we would have an average income for a credit investor solo of $565,000 a year for 2 years. And then, of course, combined, we're looking at $848,000 combined as with your spouse. Again, you have to do that for 2 years. And at the same time, if you want to qualify on the asset threshold, again, without your primary residence, you will need to qualify for at least $2.8 million. We're talking about easily cutting the 10 to 12%, maybe down to 5, 4, 3% of Americans that can actually invest in private placements as a result.
And I gotta say, I'm really not a fan of these potential opportunities. And certainly, the SEC will do what it needs to do as it feels to protect the average investor. But when you look at just so many opportunities that there are to blow your money, to be quite frank, you've got lottery tickets, you've got gambling, you've got all these crazy opportunities that we don't subscribe to only accredited investors. One amazing way to create wealth for yourself is to participate in capital markets, to invest in early into some of these deals. And I just think that this is really a constrictive opportunity that doesn't actually encourage innovation in the US. I think that this is only going to force, the rich to get richer, right? That 3, 4, 5% that can participate are now going to have even more leverage and even more influence on those capital markets, and are going to have less focus on creating more wealth opportunities for more of the general population. So, we'll see how they do. I know what they're, I think that their line of thinking makes sense from, adjusting these things based off of income. But if they're going to do something like this, I would really hope that there's an opportunity for those that aren't falling into those income levels to be able to become accredited in a streamlined process that doesn't necessarily force you to become a broker, which again is also pretty constrictive. So we'll see. It's interesting, but it's really going to potentially, I think, hurt the U.S. capital markets in the long run.
Yeah, at least we saw some expansions with being licensed as an RIA or an investment banker, but at the end of the day, that's a very small subset of the population. So to your point, hopefully we see some further expansion if they were to move forward with this adjustment. And how would that look like exactly? Well, the SEC would have to come out and say, we have a plan to change the accredited investor definition. So maybe they could do this just maybe as soon as September, maybe later, who knows? But at the end of the day, they'll come out and say, this is our plan, and they'll say exactly what their new numbers are. But there is as a part of it will be a comment period for any one of us to actually participate and give our voice. We've been cited before, so they definitely do pay attention. And all of us need to let them know that they need to keep the thresholds where they are and even expand them further to make it possible for more people to participate in private placements, at least under our opinion, right? So if you feel that way, definitely look out for this. We'll be aware to let you know, because there are huge ramifications. I agree with you. Less investors means less innovation getting funded, less startups, making it harder for entrepreneurs to raise capital and build businesses and create jobs. And furthermore, it might actually create a little bit of a push towards crowdfunding, because it will become one of the only means that you can actually feasibly raise capital to get your project started and get off the ground. So there is that one bonus. But the comment period, how long would that last? probably around 3 to 6 months. So we're looking at maybe the earliest changes happening in March of 2022. But at the end of the day, hopefully we can stop it where it is with a lot of commentary on their when they actually let us know what the actual changes will be.
And I think that that's a wrap for the accredited investor definition, where we are now, where we potentially are headed in the future. Follow us everywhere: Twitter, YouTube, social medias. Go on stomarket.com to find out more information about trading tokens. Go to the What's Drippin' newsletter to find out more about our newsletter, talking about casual tones, updates in the space, and all of our other awesome media properties. You can check it all out on stomarket.com and all of our different media
You can
properties.
always reach out to us with feedback, questions, suggestions. We're available on LinkedIn and Twitter always. And of course, we'll catch you next week, and happy tokenizing.